This is the MTPredictor weekly market update for October 5th. So we are in to the last quarter of the year here, and we've got an earnings season just ahead of us. And we're also in, of course, October, which a lot of people associate Octobers in the market with stock crashes. And certainly we've had some corrective action here. We had the heads up here, just like we did back here with the decision point sell signal. This one happened to be in conjunction with a 5-wave pattern up that corrected back to this wave 4 DP there. And this DP, again, a sell signal, meaning also we have divergence up here. And put the analysis on there. So we did correct back to the DP support here. This action, we talked about this, looked like this back and forth action. We had the market sell-off, which we anticipated getting a couple of days of sell-off there, and then the big up move the next day looked like moving prices higher just so they could sell at a better price. Smacked it back down. Another rally here. And this was the candle that we were looking at last Sunday. I said if they broke the high of that candle, then we should get some follow through on that to the upside. And of course, if they don't, that would be a negative for the market anyway. And you can see they ended up just breaking the low of that candle, and eventually, again, saw some follow through to the downside there. Now we did close back in the decision point support area. And we've got this nice little what we call market structure low pattern here. So if we take out Friday's high, that's going to be in the ES 1964.50. All right, we should get some follow through on that. It may be only a day or two, but we should get some follow through on that. If they're not able to reach that level, we may get a lower high. If we get a lower high here this week, then watch a break below that candle low for more follow through to the downside. All right, so let's get a might as well go right to the dollar here, because the dollar index, because that's been the real driver as of late. You can see the strength in the dollar here. Again, this was our significant low here. This is the daily chart here. This was our holy grail trade, this TS1, which is your ABC correction in wave 2. So this was a wave 1, the ABC in wave 2. That's when Elliott said that's the best time to be a buyer. And here was the typical wave 3, which would be your target there, and you can see it's just taken out all those wave 3 targets. Now this little swing, remember we projected wave 4, and we talked about this pullback may not get into the actual wave 4 support, and it was just a small corrective action there. And so on the daily chart, this now becomes wave 5 up. So the dollar has run on the daily chart 5 waves up here, and so we would anticipate some corrective action back to this wave 4 DP. It's going to be this level here. Alright, we'll see if that happens. Let's look at the weekly chart here. If the dollar does begin to correct, we'll look at some other stuff where that your commodities, your soft, your metals may get some relief, and may at least begin to bottom and rally. Then we'll check this level. If we do get a corrective move back to this level in the dollar, if this level holds as support, then we expect the trend which was up prior then to continue up in the dollar. But if it gives way, if this does not hold as support, then they may wipe out this whole 5-wave pattern up to the downside, and we'll take a decision point off of the bottom of wave 1 here. Okay, this is a pattern that you'll see as a tendency that happens over and over and over again. So if this holds as support, the trend which was up should continue up. If it gives way, it doesn't act as support, then the trend that was up here should be eliminated, and we should find ourselves down here at some point. All right, so critical point for the dollar here, and you'll see how it's affecting other markets. Let's just look at the weekly chart here, a little more or a little bigger picture, because this was the level here over the last couple of years. The dollar just couldn't get through. It'd come up into this level, get rejected, come up, rejected, rejected. Well, it's closed above that level the prior week, and then this week took out the high there, and that points us again to the next resistance level. So we can put on a decision point here. Right, so we're in that resistance, and you can see also the 1, 2, 3 here on the weekly chart. So even in terms of the weekly chart, this has gone your maximum or extended wave 3 here, and so at least, again, anticipating a corrective move, in this case it'd be into a wave 4, and I'll project that here. Alright, and that looks like that pretty well coincides with the wave 4 DP that we were looking at on the daily chart. So maybe, and the big thing with the dollar here, or one of the things here, is as it strengthens, it's going to hurt corporate profits, especially for the multinationals that are sell overseas. It's going to make the cost of our goods and services it's going to go up, and so for these other countries, so that is going to be a drag on stocks. If the dollar continues its move up in its strength, and so the stock sell-off also, in conjunction with the rally in the dollar, maybe getting priced in. And then let's step back one more time frame to the monthly chart, and you can see again. Let's take a decision point off here so we can see the major support here. Initial rally on the monthly chart, and this was the first ABC correction here. So another holy grail, but this time on the monthly chart. All right, and here, let me make this bigger here. Let me grab this. Okay, so here is your typical wave 3 target, so up around 92, 92.20 in the dollar. So you can see where the dollar is currently. We talked about the resistance. It's taken out these prior swing highs here, and if this is also going to play out as a wave 3, then the dollar is going to be up here around 92. Now obviously it's a monthly chart, longer time frame. We should see corrections on the smaller time frames. If they eventually make their way up to this level, obviously it's going to be, well, just this move in the dollar has had such a big impact on the commodities, the oil, your soft commodities, your metals. Let's take a look at the metals. And let's take a look at silver here. That's the monthly chart, but I actually want to look at the weekly. So it kind of gives us a little better picture of what was happening here. So again, here was our highs back here. That was a 5-wave pattern, a nice 5-wave pattern up. We would then anticipate, again, same analysis, different market, a correction back to the wave 4 DP, which we got. And then inside that area here, we had our pattern, our wave 4. Right, so this was the area again to look to be a seller, looking for a wave 5 down. So a lot of MTPredictor clients were selling silver at that point. And let's go down wave 5 here, and you'll see that we've finally, after many weeks, reached the minimum wave 5 target. Now, again, a lot of this is going to depend on the dollar, because if I take a decision point off of the prior low in wave 3 here, you'll see that we're also in this decision point support. So if we've got the dollar in some resistance, anticipating a pullback there, that may give relief to some of the selling that we've seen in gold and silver and soybeans and corn and all these other things. Maybe get a bounce here. If we close below this level and whatever low gets taken out, here's your typical wave 5. All right, now the danger now is because if we go too far beyond the wave 4 DP here, which it's looking like more and more that is the case if this level doesn't hold at least. Now we go to the bottom of the wave 1 in that 5-wave pattern up, because this becomes the next target in the dollar, which would put it down around the $15 an ounce level. Alright, so big implications with that strong dollar. Corporate earnings are going to be affected if this continues. We've got our earnings coming into earnings season here. The market may be already factoring this in by the correction that we're seeing here. We're into October now, so this is a time where markets are going to get nervous anyway. But we'll see if we get some corrective action in the dollar, maybe get a little more rally in the stocks into earnings season, which I like to do ahead of earnings, and then we're going to see if these levels hold. If the dollar holds support in that wave 4, in that DP support area from the weekly, then maybe we get another leg or rally in the dollar as the monthly chart begins to play out. But this will have, I think, big implication. All right, and as far as this week's news and things go, FOMC minutes will be on Wednesday, and then of course Thursday you got your jobless claims. ECB, I think Draghi speaks on Thursday, and so depending on what's said there, that could be a market mover. And that's about it for the week, I think. So we'll come back, see if the dollar does begin to correct. Well, one last thing, just as we're talking about the dollar, let's just take a look at the euro versus US dollar. I meant to bring this up earlier because it also coincides, not the weekly but the daily chart here. This has had a nice, in fact I think I've got a better chart here all set up. Here's the euro US dollar here. This has had a nice 5-wave pattern down. It's also in the weekly decision point, so the larger degree support area. High volume came in there on the turn. We'll see if we get a blue buyer's candle to form in the support area, in the wave 5 target area. If so, then the euro may rally against the dollar back to the wave 4 DP. Alright, so that'll be something to watch as well. Now if this area gives way as support, then obviously the dollar is continuing its march higher, and we'll look at the next, you get your typical wave 5 here, and then your maximum wave 5 below that around 22.20. Alright, so we'll come back and see how things play out, and we'll be back next week. Take care, have a great trading week.